Options, Futures, and Other Derivatives by John C. Hull is a comprehensive textbook that explores the world of derivative securities, including options, futures, and other complex financial instruments. The book serves as a foundational resource for students, professionals, and anyone interested in understanding the mechanics, pricing, and risk management techniques associated with derivatives. Hull covers the theoretical and practical aspects of derivatives markets, emphasizing their role in modern finance and their applications in hedging, speculation, and arbitrage. Hull begins by explaining the basic concepts of derivative markets, including the characteristics of options, both call and put options, futures contracts, and swaps. He describes how these instruments derive their value from underlying assets, such as stocks, bonds, or commodities, and the ways in which they can be used to manage risk or take on leverage. The book explores how options and futures are traded, with detailed explanations of their pricing models, such as the Black-Scholes model for options pricing and the cost of carry model for futures pricing. The book also delves deeply into the mathematical and statistical foundations of derivative pricing, covering essential topics like stochastic processes, risk-neutral pricing, and the use of probability theory in determining the fair value of derivatives. Hull emphasizes the importance of understanding market dynamics and the behavior of financial instruments in the context of both theoretical models and real-world market conditions. Hull goes beyond just pricing models and discusses the practical uses of derivatives in risk management, including the creation of hedging strategies to mitigate exposure to price movements in underlying assets. The book details various risk management techniques, such as the use of options for portfolio protection and futures for locking in prices, and highlights the concept of delta hedging for managing options portfolios. In addition to the core focus on options and futures, Hull provides extensive coverage of interest rate derivatives, including swaps and forward rate agreements, FRAs, and explores the evolving market for credit derivatives. The book also addresses the impact of factors like volatility, liquidity, and market structure on derivative pricing and strategies, providing a thorough understanding of how derivatives function in real markets. Hull emphasizes the importance of managing the risks associated with derivatives, including credit risk, liquidity risk, and the potential for market manipulation. He also includes discussions on the regulatory environment surrounding derivatives markets, especially after the global financial crisis of 2008, and the role of derivatives in the financial system's stability. Ultimately, Options, Futures, and Other Derivatives is an essential guide to the complex world of derivatives, blending theoretical concepts with practical applications. Hull's clear, accessible writing and his systematic approach to the subject make the book invaluable for anyone looking to gain a solid understanding of derivative instruments, their valuation, and their role in financial markets and risk management. Whether for academic purposes or professional development, this book provides a thorough foundation in derivatives trading, pricing, and risk management.